Hi everyone, a very good afternoon. You're watching the newsroom on ET Now. I'm Mubina Kabasi. What's up with the markets as we speak? Well, remember that the Dow at this juncture is doing pretty okay. So we do have the Indian equity markets as well. They are in the green, but they've actually slipped a tad bit, from the high point of the day. So we have 11,509 where the Nifty is currently trading. And in just the last couple of minutes, in fact, we've seen quite a sharp decline. It's just like a one-way drop suddenly being witnessed from the high point of 11,560. We've lost almost about 60 odd points. So just in the last couple of seconds, we've seen a rapid fall come by. But, look at the technology pack. HCL Tech is still gaining 10% in trade. Infy is higher by 4%. I think what's lost a little steam has been TCS, which has dropped quite a bit. But Wipro and Tech Mahindra is higher by 3.5%. So perhaps a little bit of loss has come by because of maybe a TCS. Let's just pull up the intraday chart and see if there's anything substantial going on over there. Well, not really. It's still 2.8% higher, but definitely not in the top gainers list. By the way, TCS has become the second Indian company to cross the 9 lakh crore rupee market valuation. So that's, sort of 2440 rupees, by the way, for a TCS. And the broader markets as well, it's technology that's reigning supreme, KPIT, persistent, etc. So without any further ado, let's do one thing and kickstart our Market Fatafat segment where we flag off all the big movers. So HCL Tech is 10% higher. This after the company gave a guidance where they're saying that, look, things seem to be doing pretty okay. In fact, they are also talking about giving a strong revenue and margin guidance. So that is something that's the cynosure of all eyes. We have brokerages as well that are saying that, we're seeing strong execution. We are seeing good booking momentum, a healthy deal pipeline as well. So brokerages as well pretty pleased with what HCL Tech has said. The other IT stock in focus is also Infosys, and we have the news flow as well around this one, which is keeping it active in trade. The company has made an acquisition of Guide Vision, which is a leading ServiceNow elite partner in Europe, a 30 million euro acquisition in an all-cash deal. ServiceNow, by the way, is the fastest growing enterprise software company, which will in turn augment Infosys' Cobalt portfolio of cloud services. Infosys as well joining in on that rally being witnessed in technology counters. But moving away from IT, let's take a look at MCX. We've seen massive momentum over there, not particularly being triggered by, any news, but price and volume action being witnessed. So volumes, in fact, were more than 10 times the 20-day average for the stock price of MCX. And it is also seeing the most gains since at least the 4th of August. So that's the counter that we are going to be flagging off for you, almost 14% higher in trade. And the other stock that's gaining, or rather the basket that's gaining, is two stocks from the cap goods space, Blue Star as well as Voltas. Now remember that we have been talking about the all-important circular, the SEBI circular that was released over the weekend. And interestingly, Voltas as well is one of the stocks that's right out there when it comes to mid and small cap stocks that are being owned by mutual funds. We spoke to Rupesh Patel just in the previous show, and he himself, for his mid-cap growth fund, has Voltas, which is 4.4% of the fund. Maybe that could be a reason, but otherwise, in general, we are seeing a lot of activity in cap goods. So Blue Star and Voltas are the other big movers that we want to flag off for you. Okay, well, on to an ET Now exclusive. The Commerce Ministry and Sports Ministry are in discussions to discourage imports of sports goods from China into India. People in the know have told ET Now that the Narendra Modi government plans to increase import duty on sporting goods in a phased manner and provide few local incentives to pull up manufacturing. So how is India going on the offensive? Let's head across to Karishma for more details.
Right, like you mentioned, that the Narendra Modi government, as our sources hint, has been in discussions on increasing the import duty on sports equipments and goods. Currently, we import at a rate of about 25%, but that differs product-wise. And what I'm picking up is that there could be a phased-wise increase in import duty, which will extend for next 5 years. This is also being done to, of course, cut down the dependency that India has on China. What we're also picking up is that the PU foam material that's imported from China, from Taiwan, is imported in larger quantities. It's used to make sports equipment, used to make sports products like that of cricket gloves, cricket pads, or footballs. Well, that government is also looking for a domestic substitute for that. Now, what we're picking up is industry has met government officials and they've set in certain kind of suggestions that include scaling up the infrastructure and also looking into an R&D across certain places where the material testing can be taken up. In fact, what we're also picking up is that the conversations may not end here. The discussions could be scaled up, and in a process of few months, we may expect some announcement only and only if government gets in a substitute of these imports through certain kind of infra development. Now, Costco India is a sports company, which is also set in certain recommendations to the company. We are picking up that government has received from not only the industry associations, but also companies in order to look into the Atmanirbharta of sports industry.
All right, Karishma, thank you for that. Well, more stocks in news then. In SBI, the big brokerage recommendations and upgrades keep pouring in. Now we have Citi that's bullish on India's largest banking company. Let's go across to Varun Hiremat. Varun, what exactly is getting Citi, to give out a bullish note on SBI?
It was about, 2 weeks ago where we had the 3-day run for SBI, CLSA, Goldman, and then another broker, I can't remember now, came out with very bullish 300 rupee targets on SBI. SBI, meanwhile, which was hovering at 180, made a sharp move up to 200 during that week. What followed in the next week was that we never saw really much action from SBI or any other private bank for that matter, and the speculation crept in again till the very last portion of last week on Friday, where we saw the banks pick up a little bit again, and SBI particularly closed the week out last week 2.3% higher at just over 200 bucks. Now today, Citi's come out with a very positive note again. They call it concerns overdone, positive catalyst watch. Now, beginning with the first and most important point in their note, asset quality. SBI's moratorium, 9.5%. If you expect 50% of that to go bad, that's around 4.5%. That's 4% of SBI's term loans. That implies a 4% slippage in Q1 FY21 and around a 390 bips credit cost. Based on Citi, they think that at the current price, the credit cost is actually elevated at 60 bips higher than what they actually think it's going to be. So that's the first positive thing.
Okay, that's State Bank of India for you in focus. Well, it's time for yet another ET Now exclusive. Your channel has exclusively learned that ARCs are all set to meet with RBI on various issues holding up resolution plans. Now, this meeting is coming in the backdrop of the RBI rejecting a resolution plan for HCL by UV Asset Reconstruction Company, as it went against the Sarfazi Act, which does not allow ARCs to become resolution applicants. We now learn from sources that ARCs are likely to meet RBI officials on the 17th of September to not just discuss this case, but other issues as well. We have Priyanka Iyer joining us with all the exclusive details. So Priyanka, what can we expect will be on the agenda of this meeting?
Well, yes, as you said, 17th of September is what we are picking up from sources when ARCs will meet with RBI. Remember, RBI had rejected UVARC's bid, saying that the Sarfazi Act does not allow ARCs to bid for stressed assets. They have said that this is sort of a conflict, what we are understanding from sources, that comes with the IBC. So the discussion will be around what are the steps that the RBI will take. Will they suggest or, will they put out any tweaks in the Sarfazi Act so that asset reconstruction companies can go forward with the plan? A lot of people argue that IBC overrides the Sarfazi Act as well, so there should be no requirement of a tweak. So the discussion will be around what will be the way ahead for the act so that ARCs can go ahead and bid, and there's no such rejection that comes forth. Remember, UVARC is also a bidder for RCOM. They are the preferred resolution applicant for RCOM as well. So that will be another case that will be impacted by this whole decision. Apart from that, they will be discussing the process where banks sell their bad loans to ARCs. In that scenario, ARCs spend around 15% of the total bad loan amount. That is the amount that they pay to banks The rest has been put in by venture capitalists or funds who are willing to put in their money. So what ARCs are saying is that in such a scenario, if the banks are fully exiting the NPAs, they would like to pay a smaller share of the total investment. They would like to pay only 1 to 5%, while the rest can be put in by funds, etc., and offload the bad loans from the banks and go ahead with the resolution. Another topic of discussion is going to be on the Fair Practices Code that the RBI had put up on 16th of July this year. There will be a few discussions on a few conflicts that the ARCs are seeing in the Fair Practices Code. But very importantly, clarity is sought on the point of ARCs being a resolution applicant in the first place, especially how it is put in the SARFAESI Act.
All right. Okay. Thank you so much, Priyanka, for that. We'll do one thing. We'll take a very short break right here on the show. Okay, welcome back. You're watching the newsroom on ET Now. Is work from home taking a toll on your fitness regime and you constantly fretting over the extra pounds on your weighing scale? Well, we have top fitness gurus Mickey Mehta and Lou Coutinho joining in to tell us how to maintain that perfect work-life balance and get you fitter at the same time.
Very little activity, and the companies extract a lot of work out of you. And you must know the basic instinct of man emanates out of the lowest chakra, which is Mooladhara. So fight, flight, procreate, and food. Humans gravitate towards food a lot because that is the only gratification a man goes towards or leans towards, because when a man is more connected to the instincts and not towards the consciousness, the levitation of awareness and the growth of evolution, then food becomes very important. And when food becomes very important, of course, there is no escape but to put on weight. And I think we cater to our appetite and not the hunger. We cater to the lust and not the need. This is the reason. Because we are connected to the instinctiveness of the animals, and we haven't broken through the shackles of being so anchored deep below, we are all drowned in food, and what we think about is only food, food, food all the time. And yes, very few people have the discipline to counter it with exercise, sleep, laughter, recreation, positivity, affirmations, visualizations, meditation, prayer, etc., etc. So my prayer to all of you people, the audience, that if at all food is so important, be so, it may, but also counter it with discipline of exercise. Luke will talk about the science of sleep also, sleep, breathing, meditation, and everything put together, and be healthy. Your food should be healing. Your food shouldn't be a debauchery. Your food shouldn't be greed-based, gluttony-based.
I have a perspective as well. You know, we actually have the same problem as we had even before COVID, just a different situation. Even when there wasn't a COVID, people were sedentary, besides the fact that they had to probably walk, get a train, get into their car, walk a few steps. You know, a sedentary lifestyle existed even before that. I think what we're looking at right now is a mindset change. You know, a lot of people look at work from home as really a good option because they can eat their meals on time. They have more time to work out. Before, people spent almost 2 to 3 hours in commute in a city like Mumbai or Delhi, and they didn't have time to work out. But now they have the ability to work out. They have the ability to eat meals at the same time. A lot of good stuff can also happen. So like Dr. Mickey Mehta really said, I think the underlying problem is a lack of discipline and a lack of, consistency. You know, if we're working from home, we have the ability to work out. Just because it's work from home doesn't mean we have to be lazier. It doesn't mean that we have to gravitate towards food all the time. That happened even before COVID. People were ordering food and Swiggying food and Zomatoing food to offices, or they were eating out at restaurants, most of their meals. So that really isn't the problem. The problem remains the same, of our want to get healthier. I think we just have a different situation, and now we attach that to an excuse of, exercise is going to be difficult. But it's actually become easier because now you can exercise in the morning or in the afternoon or in the evening or even in between your day. So I really think it comes down to a personal choice.
All right. Well, moving on. Actor, producer, sports enthusiast Chitrangada Singh speaks to us exclusively on a special BNS and Celeb segment on investing, wealth creation, and her upcoming film Bob Biswas, directed by Sujay Ghosh. Listen in.
One has to plan like what next. Of course, there's always Netflix. But other than that, I've done a little bit of writing. So there was a short film that I was working on, and I hadn't got the time to finish with the screenplay and the dialogue. So that's something that I finished, and I'm very happy with having had all the time, and I really worked hard on it. So that, and then there's another film that we were supposed to start shooting for in April. Lekin, of course, that didn't happen, and which gave us the time to start working on the characters. So with the director and the writer, we've been working on that script as well. So yeah, I mean, there is this and that. I've done some other stuff like baking and a little bit of horse riding. And now recently I've gone and got my ACL surgery done for the knee, which means I'm sitting at home for at least about 3 weeks. I won't be able to move around at all.
We also heard that you're working with a Bengali teacher for one of your upcoming films, Bob Biswas. So could you tell us a little more about that and what it was like?
This is the one that I was talking about actually. Yeah, same film. Sujay Ghosh, who's written the film, he wrote the character as a Bengali girl in the beginning, and then I started my classes and everything, and then I don't know, he needed to make certain changes in the screenplay because of what was required in the script. He was still working on it. So yeah, he took that bit off that I am speaking Bengali. It's mostly now Hindi. So yeah, I didn't really have to go through. But I did start learning Bengali a little bit, yes.
Okay. And you produced Surma. Could you tell us more about being behind the scenes versus being in front of the camera? And what gives you greater joy, and can we expect more such productions in the near future?
Inshallah, I hope so. I really hope so. What was different was, my God, I just realized that it's a lot more hectic, you know. I mean, it is a lot more, how do I say this? So firstly, you need to be a lot more persistent. You have to want it much more bad than you probably do as an actor, in the sense you live with this project. Like, I started in 2016 and we finally managed to finish in 2018. So it took me like at least 2.5 years to actually see it on screen. To have that kind of persistence, to work with people, to get the right kind of, team together. Just managing people, like creative people, I think it just is quite tough because it is not a 9-to-5 job. There's a lot about creative opinions and discussions and who gets what on the table. So it is extremely intense sort of 2 years that I had, and I realized it's not just the money. I mean, there's so much more that goes into just producing the film. People think it's just the money. It's not. You really have to be in love with what you're doing. It's not just like walking to the vanity and going to the set, giving your shot and coming back and sitting in the car. It's a lot more than that. And it continues for those 2.5 years till you actually see the film. So I have so much more respect for the whole production aspect of the filmmaking, It's, I think my maximum learning has probably happened through those 2.5 years of having put Surma together.
So we remember interacting with you during the Bazaar promotions, and a lot has changed since then for the stock market. Have you altered your strategies, or has anything changed in your investing life since then?
Firstly, I don't take any calls myself. It's not like I understand the market so well. It's just people who are investing for me keep briefing me about what's happening. And it sort of interests me because it's kind of emotional. I think the market is also very emotional. It also gets affected by the world sentiment and what's happening in the country. So I find that quite interesting. So what has changed? I think, lately, the discussions that I've had, I have invested in a lot of mid-caps, because that's probably what's benefiting the most right now. And almost every day you see, what do you call that? Like when it goes up and down, like there's a lot of movement in the market.
Volatility.
Yeah, it's pretty volatile, especially the mid-caps. So that's what I've invested in, and lately, so that's probably the only change. Otherwise, I like to keep my debt and equity. I like to keep less in debt, more in equity, because you're still in that age where you're earning and it's kind of regular. That's what I'm told. So yeah, but I have shifted a little bit more towards equity since the lockdown, because the markets are sort of recovering, and they will recover is what I'm told, hopefully. And it should I know, but I think I would say they will, right? I mean, there's just so much to make up for. It probably will be a slightly long-term thing, but I think it will.